With proper planning, a retiree can keep their tax bill as low as possible during retirement. To discuss some ways to develop an efficient tax plan, my guest is Ian Maxwell in La Jolla, California. Ian, welcome back. Can you start out by talking about the difference between tax preparation and tax planning?
Huge difference, right? Tax prep, when I hear that, I'm thinking just preparing your tax returns in any given year. Tax planning is a lot more forward thinking. We're not just thinking of your tax burden this year. I'm thinking of your tax burden 10, 20, 30 years out into the future, and not just for you, but also for your potential heirs looking way out. So it's a much more longer perspective. And you know, I often talk about what I call American money myths that people kind of grab onto, and one of them is people just say, oh, I'm going to retire in a lower tax bracket. And they say that as if it's a matter of fact. And I say it's entirely possible to retire in a lower tax bracket, but it doesn't happen automatically. It actually takes a lot of planning and effort up front. And people either just don't know, they're holding on to ideas that, again, are 20, 30 years old, thinking that, you know, their parents' retirement is going to be what their retirement is like. So the tax planning piece, from my perspective, is probably the most important, especially in terms of longevity, because we're all going to live a lot longer. So making your money last beyond your death, right? Nobody wants to run out short of the finish line. Taxes is really one of the biggest forces working against us, so that tax planning piece is huge. And it's hard for people to get to understand that when we're taking that long-term perspective, you might feel a little bit of a pain pinch in the short term, because I'm not just thinking of this year. If you want to really be prepared after you stop working, it might take an adjustment now and breaking away from the annual perspective and thinking much further out.
So what determines if a Roth conversion is a good idea for one of your clients?
Yeah, you know, most of the people I see, that's one of their biggest deficiencies when they say they want to retire in a lower tax bracket. And we open up the books and see where things sit, and they have nothing put in place to do that, because really having that Roth or tax-free bucket of money really well developed and well funded is one of the most important pieces of having that lower tax bracket when you retire. So whether it's Roth money or whether it's a Roth 401k, having those tax-free dollars is absolutely vital. And again, the big difference there is you don't get the tax postponement right now, but it's completely tax-free when you stop working. So I think developing that tax-free bucket, Roths are the first place we look to make sure people are maxing out all of their Roth options to get that filled up.
And another strategy to minimize taxes in retirement income planning is life insurance. How can that be leveraged here?
Well, yeah, when you look at people who've done a good job of saving in that accumulation phase of their life, and they've done really well, then not only talking about tax planning, you're also getting into like legacy planning, right? And looking at their inheritance and how they're going to pass that money on to their heirs. So in that place, life insurance becomes a huge piece of it, right? Because not only can it be used to build a tax-free bucket over time, it can be used even in the way of like converting taxable retirement dollars into tax-free dollars over time, depending on when they come to us and how much time we have. But having that tax-free death benefit is also incredibly important, where depending how your assets are set up, how your heirs are going to inherit those when you're gone or when you're living, you can give with warm hands or cold, right? Having those tax-free dollars there just gives you an immense amount of control and a little more granular flexibility, right, to make adjustments to make sure that you're handling your current taxes as efficiently as possible, and also when you pass that money on to your heirs, that they don't feel an unnecessary tax burden as well. So the cash value life insurance, when structured and developed properly, is a vital tool in order to make that happen.
That's Ian Maxwell in La Jolla, California. Thanks for watching Retirement News Online.